You know, people are always asking me, what is it that I do on a daily that allows me to really profit from the market? You know, how can I be so consistent in my trading? You know, it took me some time, and I've talked about this several times in several videos in the past, but they're always questioning when they see you, making money each and every day and can't quite understand how they're actually taking losing trades, but you aren't. I think it's one of the most frustrating things because I actually placed myself or was in that position many years back to where you see people posting videos online. And yes, a lot of things online are scams, and people are posting images of them having 5 and 10 and 20 and $50,000 days, and maybe some people are making that kind of money. But the truth of the matter is a lot of people that are on YouTube and other platforms are probably really scamming people or individuals, especially trying to sell a lot of different things, but at the same time entice you with big dollar amounts to let you or get you in the mind frame that they're actually making money. And when you're struggling as a trader to find consistency in your own trading, guess what? They're making profits, all right, while you're not. But the thing about it is that they are pulling the wool over your eyes and are really not making that money. Their end all goal is really to capture and build I guess a subscriber base or community base, or really try to sell something that doesn't really work. They're just trying to make money on the back end, okay, by selling products, and building a population or a community in a sense. Here on this channel here, I'm really all about giving away free, valuable information because I want to see people succeed, all right? And if you come over and take an interest in our Discord community, which you can find down in the link of this description or this video below in the description portion, you click on that, you'll see that we have well over 1,000 members now in the community. And there are lots of traders who are probably beginner to intermediate to probably professional traders that may trade different strategies, but come over to kind of see what the channel is all about. And I trade supply and demand, and lots of people understand that style of trading, right? And the strategy that I use. So they're grasping and understanding the strategy and have significantly turned their trading around, especially those that may have been struggling. If you don't believe me, come over to the Discord channel and check us out, all right? And even look down in the comment section here on the videos on the channel, and you'll see that where people are basically thanking me for providing free valuable content or information through the videos that has turned or helped them along the way. Trading is all about building success day by day or block by block. It's not going to happen overnight. But in this video here, I want to talk about the strategies that I use each and every day into my own trading that allows me to profit. The number one thing that I always tell people, well, three things. I'm going to say this. Market structure, okay, I cannot place enough emphasis on that. Price action, and what you really need to have from a psychology standpoint is patience. You have to be a very patient person and be passionate about what you're doing. It's like anything else in life. I always talk about that. Regardless of the career or field you're looking to take or, grab hold to, all right, and that you're interested in, you have to be successful, meaning you have to learn and learn and learn. We as people, as humans, should be learning each and every day. So enough said, let's jump into the video. I want to walk you through a quick setup that you can just basically break down and watch this video over and over and over, okay, till you grasp an understanding. It's basically taking a top-down analysis approach, all right? And I have shown in videos where you can actually just trade off of one specific chart, okay? Meaning one time frame or regardless of what type of chart you trade. If you trade time-based, range, volume, tick, it doesn't matter. There are opportunities where you can trade using one chart, but I'll always say, be in the direction if you're going to trade from one chart, trading around supply and demand and using a strategy, be in the same direction and taking your entries in the direction of the higher time frame, okay? And this strategy that I use, the one that is my bread and butter or cornerstone of my trading, I talk about, I want you to really grasp and understand what I'm doing here, okay? It's using top-down analysis. I'm using paired charts to allow me to execute trades, all right, based on the direction of how the market is actually flowing, all right? So let's jump into it right now. Now, what you see here is a 24 range chart. Yes, my higher base time frame chart is a 60 range chart, all right? And maybe you are a minute-based or time-based chart trader and you're using time-based charts, okay? Maybe it's a 60-minute chart and you pair it with a 5-minute chart. I'll talk about that, okay? Not saying that the charts I use are in comparison. It's just the fact is trading range charts, help me kind of to really open my eyes and see things from a little bit cleaner standpoint in a sense, because with time-based charts, the candles can be very large, which is fine because lots of times when you see big candles, that means big volume, right? All right, so take a look here. I'm going to walk you through this trade strategy, okay, so that you can grasp it. Again, watch it, rewatch it, and rewatch it again, all right? Pass the information along, guys. I'm not saying keep it to yourself. The reason why I do these videos and make this content is because I truly believe in helping people out. At the same time, I want to see people pass things forward, okay? We never know. At the end of the day, when is it our time, okay? Meaning physically we won't be here any longer. So it's like, wait, if I'm making money, why not pass something along that can help other individuals out? That's the purpose of life to me, all right? So take this, what I'm trying to say, and you know, you can do what you want to do with it, and maybe it works for you. I mean, it is working for tons of individuals on the Discord side of things. Now, I'm not saying everybody trades the same strategy I do, but they grasp it, they understand it, and maybe they incorporate it into their own trading. But anyways, enough talking. Let's jump into it. What we see here is what? Now, this is on 24 range chart, and we see bullish activity coming out of the market, right? Or in the market. We see higher highs and higher lows. Now, if you do not understand what's going on there, then stop yourself, halt yourself, and look and say this: I completely don't understand what a higher high and higher low is. The market moving to the upside. If you don't know what's bullish and what's a bearish market cycle, then go back and kind of, you know, watch some videos or go on to YouTube or wherever you get your information from, and just kind of see, what does bullish mean, what does bearish mean. Bullish means that the market is pushing to the upside in a strong trend direction. Now here in the 24 range chart, we see price moving to the upside, making higher highs and higher lows, right? Now, I want to show you a setup, and I'm going to talk about break of structure, really meaning to clearly define it in another video. But just for the sake of this video here, I'm going to kind of push through things. Now, what we see here is price making higher highs and higher lows, right? We make a high here on the 14th of April. We're not even into the summertime yet. April right here. Price pulls back, right? Okay, as it's pulling or retracing back, all right, it breaks through some area to the downside, man, taking out some levels, whatever the case is, breaking through some lows, right? Pushes lower or retraces back to break higher. Once we get the break, price taking out a prior high, we get what's called a BOS, a break of structure, correct? So price breaks higher, all right? Now, again, we want to mark, number one key thing I'm trying to get you to understand here is to mark a supply area or demand area off your higher time frame chart first. Write it down. Understand what I'm trying to say. Mark the higher time frame supply or demand off your chart first. Okay? I spoke into the mic so you can understand what I'm saying, because I'm trying to emphasize that. In this case here, price broke this high sitting here at, say, let's just say 89, okay? On the move to the upside. Once price breaks structure to the upside, or could break structure to the downside, we're looking for, once it breaks to the upside, a clear area of demand. Now, what is demand? Demand is aggressive buying. Boom! Lots of push or thrust to the upside. All right? Now, I'll always talk about this too. Take this for rule of thumb in a sense. I use the fib retracement not to trade off any key specific area or level off the retracement, just as a guide. So I'll look to see what price broke structure here to the upside, okay, with this move to the upside, aggressive buying, and I mark it from where the move started from with the push to the upside. So it started here, boom, breaks to the upside. I'm looking to see where price is at, meaning when we're buying, we're looking for to buy at cheap prices, discounted prices. When we were selling, we look to sell at a premium of where price is higher, okay? So look, when I'm looking to buy, I'm looking to classify an area of demand where there's aggressive buying at below the 50% level. That's the only reason why I'm using the Fibonacci retracement, is just to look, is price, or where can price pull back to where there's a key area of demand below the 50% level. To me, when I see price break here, am I interested right here at the 38%? No. Okay, because to me, that's kind of like the last leg or the last push to the upside before price broke structure. Now, it is a demand area, okay, and we can be mindful of it because sometimes price may want to come back to this area and just take off. But in order for you to really profit, okay, and get into really good trades where you can profit nice from, look for a significant area of high volume coming out of a demand area where price is below the 50% area. I'm interested right here, okay? Now, I'm not interested down here at the bottom. Not saying price can't come back down there and, once it retraces back down, as it did right here, and have a little push to the upside. But the thing about it is that when price broke to the upside right here and pulled back, it filled in the imbalances or gaps that are left behind. So it left none. In this case right here, we do have imbalance. We have a small little imbalance. An imbalance is a gap between where price took off at and where it failed to come back to fill in an area. So basically that means that there was orders that were placed here, price pushed away from it quick enough, didn't more than likely fill all those orders. So when it gets back, it comes back to the area or transact back at that zone, more than likely they're going to try to refill orders. When I say they, I'm talking about the banks and the institutions, okay? The big money players in the market. So I'm looking, I have this zone here marked right here, this blue box, okay? Now, once we tap into the area of demand, let's bring this up a little higher right here on video, we trace back to that zone. Okay, you maybe ask yourself, well, what happens next? Okay, once you mark the in this case here, this example, the demand zone on the higher time frame, just scale down to your next lower time frame, okay? For me, it's the 12 range chart. So, I'm done with this chart right now. Price is tapped into the zone, okay? Now I'm going to go down to my 12 range chart. Let's bring it up. Okay, this is the zone, right? Let's go ahead and do this though, just for all sakes and purposes. Let's do this. Let's put this on, I guess, all charts. Let's see if I can do it. All right, all charts. Okay. All right, let's minimize it. Let's bring up our 12 range. Boom, there's that box. That's the demand zone off the 24 range chart, the slightly higher time frame. Okay. All I'm waiting for price to do is retrace back to the zone, okay? Once it taps into that demand zone that I marked off on my 24 range, I'm just waiting now for the rejection. But one thing I want to see for sure, one thing I do want to see, okay? Was there an imbalance or a gap, okay, back at that demand zone? We just talked about that. There is an imbalance or gap here at the demand zone off the higher time frame. So I scale down to my 12 range chart here, and I'm looking to see once price retraces back to it, if we're going to get some confirmation or rejection at this point here to take the trade going back up, okay? Now, we do have to be mindful that as price was retracing back down, what was it doing? It was making lower lows and lower highs, okay? And it did break structure to the downside, all right? So we have to be mindful of this area right here because price could push back up to this zone right here, reject and push down, okay? Because we got a break of structure happening in this area right here when price pushed down, pulled back, broke higher, boom, broke back up a little bit, okay, and then broke structure, taking out this low right here to the downside. This is a break of structure to the downside right here off the 12 range chart where price could, retrace back to and reject this zone right here and then push lower, okay? But it did push a little higher. But look, we're tapping into the demand zone now on the lower time frame. What am I looking for? I'm looking for rejection. Rejection meaning, where price tries to consistently push lower. And looking at the candles, is it wicking out several times at the bottom and just, rejecting to push higher? And typically what I like to see is a break of a candle in the opposite direction, meaning now that we're pushing lower, an area where price is either going to break a candle in the opposite direction to the upside, meaning last red candle to the downside, price turns around with a green candle, takes out that last red candle to the downside, clears it, and go long, okay? But what I like to really see is if we get a kind of like a reversal in a sense, or what I call a directional shift in the market, meaning price, taking out an area of a small area of structure to the upside. Okay, it could be what a lot of traders like to call a chalk or a change of character, meaning a market shift or a change in direction to the upside. Right here, as price pushes down, pulls back and breaks lower, slightly lower right here. Okay. We look at this because we're tapping to the zone now, all right? Now, when price broke above right here at 61, I'm interested, or say 62, right? The top end right here, okay? Because we do get a directional shift or break of structure back to the upside when price broke above 62, and all we're waiting for price to do at that point. So, okay, we get a break of structure right here, it takes out this high right here at 62, price breaks up, boom. Once it does that, I'm very interested, okay? And we look for price to come back or pull back to a now a demand zone off of our lower time frame chart. There's a small area of demand right here that came out of this move to the upside that broke structure right here, okay? And I left a little gap, okay? If you see that, a little tiny little gap. Hopefully, let's blow this up a little bit. Maybe some people saying, I don't see that. I don't see that. Well, let me show you, all right? Price broke right here. broke 62, okay, or 61 and 3/4. Here is the demand zone that it came out of. There's a small, like 1 or 2 tick gap right here. From here, and if you see right up to this area right here, there's a little gap right here, okay? Which means that price has got to come back to the area. It pushed away from it pretty quick. So probably it's going to reject that area again once price pulls back to it to push higher. Why? Because there's probably orders sitting there to be waiting to be filled, and they didn't get filled quick enough. So price pushes up, breaks structure, this little bit of area of structure right here, pulls back, waiting for that. Once I get a break of candle in the opposite direction to the upside, typically when this happens right here, I'm probably going to get in right here at 60 or 61, okay? Lots of time I tell traders to be, they're more conservative, wait for the break of structure, which would happen right here at 63 to get in. Once you get in, if you're more conservative at 63, where do you possibly want to take the trade back up to? Okay, let's take a look at that. Well, I'm aiming for this area of structure, or excuse me, not structure, of supply sitting right up in here. Break a structure to the downside, supply resting in this area right here, tons of liquidity right here, okay? What do you mean liquidity? Well, look where the money's being stacked as price pushed up, pull back, pushed up, pull back. Then they start staggering or stacking the market right here. Liquidity, 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 liquidity. They want that money right there. So guess what? When the market breaks structure right here, we've got two means of confirmation and confluence. On the higher time frame, a demand zone. We marked that, right? Which is that blue box. Now we got a new demand zone off of the lower time frame because price broke structure right here. Two means or two areas of demand: higher time frame demand, lower time frame demand. Gap right here. This price is setting itself up to push higher. We just don't know where exactly price may stall at or reject that, but I do know we have supply resting above. So if I have confluence off of 2 time frame charts that are telling me or setting me up to take a long entry, I'm going to take that trade back up to the area of supply above where liquidity is resting there. So when a price comes down, it's forming areas of liquidity. So think about, as price is moving to the downside, at every high there's liquidity, at every low there's liquidity, and especially at every equal high and equal low, this definitely means a bigger stacked up area of liquidity. So price breaks higher, pulls back right here to the area of demand right here at the breaking structure. Boom, take your shot to go long, taking it back up to this key area of supply. It's as simple as that. It's a step-by-step process that you're doing, that you're following, and want to see happen on one chart, and then the same thing unfold on a lower time frame chart. All that does is put you in the direction of the higher time frame with greater means or a higher probability chance to take that trade going long. The same thing you're looking for to unfold if you're looking for a supply setup. This was a demand setup. You do the same thing in reverse when you're looking for an opportunity to take a short. That's all I wanted to cover today, guys, to let you know my little secret and what I do each and every day, all right? Waiting patiently in the strategy I use and just putting it out there for free, okay? Try it, back test it, forward test it, see if it works for you, okay? Nothing is 100%. The thing is, in trading, you want your wins to outdo your losses, all right? And in situations like this, you get in and say here at 63, you take it back up to this area of supply here, all right, at the top right here. Let's say it runs back up and you're able to stay in the trade until 75 or 76. You're picking yourself up really like 10, 12, maybe 13 or 14 points right there, all right, off of one trade. You have multiple contracts set up on that. You have done one and done for the day, and that's it, and have profited very nice. That's all I have for you guys in this video. Again, if you're interested in joining our Discord, take a look down in the description portion of the video. Click on the link, invite yourself in free of charge, and enter into or become part of a great trading community. We have a trading floor on the Discord server or channel to where you can come over and share your trade entries. Tons of traders. We post our screenshots of our actual entries on a daily, zones and levels of interest that we trade from. But what I would like for you to do this time, if you really love the content in this video, please drop me a like on the video by smashing that thumbs up button. Also, if you have not subscribed to the channel, please click on the red subscribe button down below. Click on the bell next to it. Make sure to turn all your post notifications on so you never miss one of the uploads here on the channel. And guys, I'm out. I'll see you in the next trading week, which starts tomorrow on Monday morning. Take care. I'm out.